everybody, and welcome to the Infinite Financial Freedom Podcast, where we empower you with financial literacy and guide you on your journey to lasting wealth and independence. I'm Josh Mettle, and today I'm honored to be joined by my new friend, Andrew Abernathey, entrepreneur, investor, founder of Abernathy Holdings, father of three, totally awesome guy. You're going to love learning and hearing from Andrew today. I got the blessing to meet him at an event that we did recently called Immersion, put on by Jesse Ray, who's been on the podcast before. And it was just an incredible group of entrepreneurs that got together, and I really resonated with Andrew's story and wanted him to come on the podcast. So just a little bit about Andrew. From humble beginnings in a farm in North Dakota, Andrew has built a private equity empire with over $200 million in assets under management. As you can see, Andrew is not 60 or 70 years old, so he's done pretty well for himself in his young years. His assets include self-storage, industrial real estate. I believe they have an equipment leasing company as well. And he's not just investing in assets, he's investing in legacy, purpose, and the power of alignment between faith and finance. And that's what really struck me about this guy. He's not just in it for the dollars, he's in it for the impact that he's having on both his investors and you all today with this great conversation we have. So without further ado, Andrew, thanks for being here, brother.
I really appreciate it. I'm looking forward to it. Thank you so much for having me.
This is going to be a really fun call. Your story is probably as interesting as any that I have ever heard in the brief time that we were able to spend together and hang out. But why don't you kick this off by taking us back to those early years in North Dakota, your upbringing, how that shaped your entrepreneurial mindset. And I really want to hear, like, you were trading stocks by 13 and you had your first employee by 16. So how did that all come to be?
Yeah. So family farm started in 1901. Not by me, of course. I'm fifth generation, 31. So when I was 10 years old, I have 6 siblings. And when I was 10, my dad noticed I was really interested in finance and money. And my parents are amazing when it comes to nurturing passion for all 6 of us kids. And so when I was 10 years old, my dad had me doing puts, calls, futures on the family farm, commodities that we brought in. And he overlooked everything I did. I didn't know that at the time, but it sure made me feel good, made me feel empowered. And I really learned a lot about the markets. And in 2009, when the markets crashed, the financial markets, that's when I was kind of like, it was all over the papers. I was ninth grade, 8th grade. So I was only, 14, 15 when that happened. And it piqued my interest. I didn't know what it was, the market, and I was in commodities. So I dove in and started to learn about Berkshire Hathaway, Warren Buffett. And then my dad got in a bad accident about the same time when I was 15. So my brother and I were thrown in to run the farm at a young age. And, but when you come from farming, you learn risk at a young age. Like, I remember one time we were sitting there having supper and there was these clouds coming in and it started hailing and raining. And I just remember my dad sitting on the deck, looking out over the field and watching everything get demolished and just sitting back down and just going on like nothing happened. And like that, to me, just watching your whole year income and investment get shattered and then just sit down with your family and have supper like nothing happened. Like, that's just a whole nother level of risk. And it's just insane to physically watch that. And that was a profound moment to me.
Yeah. I imagine you're watching somebody that you're wondering how they're going to react, right? Are they going to freak out? Are they going to cry? And he just shows up as a rock. Where do you think that came from?
I think, he's 4th gen. And I just think in farming, it's interesting. Like, it's such a legacy. And I think we always compare ourselves to the ancestors, like, think about what they went through, right? My great-great-grandfather was a child when he came here, and think about how hard that was. And the Great Depression, he had to go and start making shoes in Michigan to pay the property tax. And I'm not saying it's healthy, but I think every generation just kind of says, well, it could be worse. Like, remember this generation. There's so much depth to our history as a family. It's a lot different than if you don't have that, where you just are comparing yourself to your life. I mean, we're comparing ourselves to 5 generations of lives and what they went through. So
yeah, Yeah, different perspective, and hard times make tough people,
That's
right?
right. And
Yeah.
you don't want to let anybody down. That's the biggest thing about legacy and being a generational business owner is it's really not. I look at it. My dad taught me it's not really yours. It's just you're managing it for a generation, and you're going to leave it to the next one. And that's your job to grow it and also cultivate the next generation both.
Great lessons. And so how did that lesson or your path of growing up lead you to or spark the interest in you hiring your first employee at 16? Like what was that all about?
Yeah. So I took over the farm. My dad always mentioned that he saw a talent to me, which I appreciate. My mom and dad both. And my job was to diversify the family off the farm. And
Mm.
and I'd be the first generation to do that. And so I started Abernathy Holdings. And again, he gave me that confidence. He's believed in me, believed in me at such a young age. And that was so empowering. So I started Abernathy Holdings around 14, 15, and started out as a side hobby. And then I went to buy some real estate in Bismarck, had to raise some money. So I raised my first 300 grand from a neighbor farmer, at 16, and started hiring people. And then things just went from there. I mean, I raised over 10 million before I graduated high school, from surrounding farms.
So let's talk about that for a minute. So a 16, 17, 18-year-old comes to me and wants to borrow money.
Yep.
You had to have cultivated a incredible sense of integrity and a persona that enabled somebody to trust you at a young age. So was that something that came easy to you? Was it something that you were very intentional about? How did you develop the confidence and the constitution to walk into somebody's house and ask to borrow hundreds of thousands of dollars and to trust you?
Yeah, that's a great question. I think my parents really made me feel confident about it. And if they say no, somebody else will say yes. It never bothered me, because they weren't all yeses by far. They were far from all yeses at that age. And I had to do something first. So I took 4 grand. I turned it to 80,000 in the stock market, sold that. And that's when I went and tried to buy this real estate. And that was the individual that they said, I need 300,000 more down plus a PG on the bank loan. And
Mm.
I couldn't get anybody to do it. So by the third door I knocked on, I said, how about this? If we lose 80 grand, it can be all of mine, 100% of mine. So I'll take 100% of the first losses till I'm to zero. And I'll work for free. I will, you don't need to pay me anything. And that was what I had to get that first 300 grand. And then when that went successful, we made $1 million profit in like 16 months because the oil boom hit. Then I was able to start. Then I had a real good story, and then I was able to start charging.
Yeah, for anybody who doesn't know, a PG is a personal guarantee. So
Yeah,
what Andrew was asking for was, hey, not only do I need you to lend $300,000 to this partnership, but I also need you to guarantee the debt. So how big of a loan were they taking out as well?
it was about an $800,000 loan, and then we put down 380.
It's a serious bet this guy made on your
Yeah,
call here. I
yeah,
want to I just want to dig a little deeper, dude, because when I met you, I instantly felt that you were a trustworthy individual. I instantly thought there's not a lot of pretense about this guy. What you see is what you get. He's just here, very present. He's not distracted. And that's a skill. It's a skill I think that helped you be able to generate investors early, and I'm sure it still serves you to this day. So I want to go back to the question and just ask it again. Is that a God-given gift, or is it something that you think about and have rituals and intentionality around?
that's a really good question. I think there is a lot of things that you are born with, right? There's 6 siblings, and we're all different. Now, each one of us is trustworthy, but we're not all doing what I'm doing. You have teachers and doctors and farmers, and so it's interesting, right? Environmental was all the same, but chemical makeup's different. And so, I do think that coming from a family generation and legacy, there is a lot of pressure that's put on you at a young age to make sure you have a really good moral compass, and to make sure there's negative and good pressures, right? You have to represent the name well, which creates both negative and positive pressures. So I just think from a young age, I cultivated it, and knowing, like, honestly, failure is not an option. And and letting somebody down or lying or doing something illegal, like they're just all things that they just are not options, because I'm going to ruin more than just me. And so I think it's just, I don't know. I think some people are just kind of born with it, really. I wish I had a better answer than that. It's such a good question. And it's just something, the way I've always been, you know?
I see entrepreneurs want to take shortcuts.
Yeah.
Sometimes the life of a self-employed person is so difficult. The life of an investor is so difficult. The demands are never ending. The risks are massive. And sometimes they're met with some upside and some gains. But there's more setbacks than there is victories. And in a weakened state, right? Just worn down by the obstacles of being an entrepreneur, I see people make shortcuts. And the point I'm trying to make with this, that I think is one of the first lessons in this podcast, is the people around you notice when you take shortcuts.
Yeah.
They notice when you're willing to blur the line. And in doing so, you may get 1 yard further in the moment, but you're setting yourself back miles over life. Because one of the things that I've realized is I made relationships when I was in my early 20s that are now becoming valuable for me at the age of almost 47. Like they weren't valuable to me in the same way 27 years ago that they are now. But had I not had that kind of integrity with them over the years, I would have never have gotten these opportunities.
Yeah. Yeah.
Go ahead. You got something to add to that?
No, I was just gonna say, I think it's 100%. It's funny, I'm the one, when I was a kid, I used to literally rush up to a supper table or dinner table at a restaurant and sit right in the middle and ask every individual there, superpower, success, biggest failure. Like it's just always, and then those are relationships that, came back around now, are partners or board members. And I think curiosity is it's one of my superpowers, is curiosity. And I think that's something that if everybody can have curiosity, it sure helps. You just dive in and keep learning.
Also, I find people that are curious or humble,
Yeah.
right? It's always better to be interested than interesting, right? If I'm trying to be interesting, it feels like it's about me, and the other person in that relationship or that conversation doesn't have that same level of connection. Let's fast forward a little bit. So you start in the stock market, you find this piece of land, you nail those things. Now you've got a story in this young age, and you start to snowball this success. And at some point in your journey, you find a really cool mentor.
Yeah.
I would love you to share that story because I think it's so important.
Yes, that's about now in the story. So perfect timing for the question. So about 18, 19, managing about 10, 15 million roughly in holdings. So it grew to the point where I retired from operating the farm in 2014. And my brother now fully operates it, still a silent partner. But anyways, I went off to Fargo, the big city, 5 hours away, and set up shop. And I called all the wealthiest people in North Dakota to just try to get any of them to talk to me and just learn and go from there. And one individual actually called me back. So I cold called all of them, but Gary Tharaldson, he was actually the wealthiest and still is. So I guess I got lucky on him calling me back. Called his office and he said he's not around. And 2 months later, I get a phone call from a Vegas number, and it was Gary. And we hit it off, started meeting up weekly, and just kept building a relationship. And then finally in 2020, he actually came in as a partner of mine, and in a big way. And I've emulated a lot of the things about holdings with his business and his model and his structure. And so single-handedly, he's been one of the biggest impacts in my life in a positive way.
I think it's a interesting question when somebody says, do you consider yourself self-made? And a lot of people say, yeah, I'm self-made. But always there is a story about somebody who impacted them or set them on a different path or trajectory. Like none of us are really self-made. We're inspired by different people. We have different mentors. What was in it for Gary? Like this, how old are you at this point now? Are you 20?
20. Yeah.
So you're a 20-year-old kid, you're calling a billionaire, and you're like, hey, dude, could you give me some time?
Yeah.
Um, what? I'm sure your pitch was better than that, but what was in it for Gary, and how would you suggest that other people listening to this might go about culting these mentors?
Yeah. I think what you said, I said is probably exactly what I said. But
The
no,
numbers game.
yeah, yeah. I think so. What I do know and think is these individuals, when they get to a certain point of success, I mean, what they really want to do is give back and talk about their story and it's different, right? So Gary he's got a book that was written about him. He sat down with many people, but what was different is I actually left those conversations and did the things. And
Mm.
that I think is what got me to the next meeting, the next meeting, the next meeting, and then eventually partnership is he's told 1,000 people his story. And I was one that actually went and did it. And I listened and I did it. A lot of people listen and then go back to their life and don't actually do it. So these individuals, they love to tell their story, but they also like to, it's rare if somebody they're telling it to actually takes it and does something.
I'm just thinking as a leader myself and my team, I don't think there's anything that makes me happier than sharing something that I think is a great idea or worked for me, and then having somebody take that piece of information and maybe they change it a little bit, right?
Yeah.
Like maybe they do it the way Andrew would do it instead of the way Josh would do it. And they come back and they were like, oh, I used that thing, but here's how I changed it. And here's the success that I had. Like, there's no bigger high for me personally.
Yeah. And that's the high. And that's where, Gary and I now are really close. And that's what I do. I've taken his model, a little bit of Warren Buffett, a little bit of Carnegie, a little bit of Rockefeller. I mean, I'm a big reader, and I put all these things in a pile, and that's what Holdings is. Abernathy Holdings is me taking all the best pieces of all the best businesses for 200 years and put them in a pile and make a company out of it. And I used to try to be Gary. I used to try to be Warren. I remember one year I tried to sit in my office and read annual letters all day, but then finally I had to wake up and say, who's Andrew? And that was a really profound moment for me. Is who am I? I don't need to be exactly like any of them. So that was a big turning point.
I like that. Yeah, you've got to figure out how do you learn from them and find your own path and your own way. All right, so I don't want to leave this mentor conversation until we really give somebody an actionable takeaway. So,
Yeah.
what would you say to the young women and men out there that are hungry? These are people that are absolutely willing to execute and they're looking for a mentor. How would you recommend they go about finding that mentor and then solidifying it once they get a shot at it?
Well, first off, make sure you start with the end in mind. What I mean by that is I always knew that I wanted to be a billionaire. I mean, I guess technically probably trillionaire with inflation, but I'm so young. If I lived to 95, billion, trillion, inflation, same thing. So I found a mentor that did that. And what I mean by this is that it's okay. Maybe your goal is to be the best musician, or maybe your goal is to be a millionaire. You don't want to be a billionaire or 100 million. I see so many people align themselves with people that aren't exactly what their goal is. If you want to be a millionaire, don't have a billionaire mentor. And if you want to be a billionaire, don't have a millionaire mentor. So make sure you know exactly what you want, have a true North Star, start with the end in mind, and then find whoever it is. Just do your research. And it's a numbers game. You need to go and find 20 to 30 people in the world or US that are exactly who you want to be. Morally, it's a person, maybe it's a father, all around, not just one thing. And then you start reaching out and do things like, for example, if you send a letter in a FedEx envelope, it has to go on the desk of the CEO. The receptionist doesn't open it. If you send it in a letter, the reception opens, and they don't even usually see it. Maybe include something. Like, for example, one CEO, he used to collect stamps as kids. So I went on eBay, found some of these old stamps, bought them, put them into the FedEx thing with the letter, something to stand out. So do this with 20 people that actually align with what you want. And don't stop until you get one or two that actually reach out and you guys become close. That's my advice.
It's fantastic. That's very tactical. People can execute around that. Now you get the meeting, and I'm assuming it is be interested, not
Yeah.
interesting. But what else would you say once you get the meeting, whether that's a phone call or a sit down? What should they do there?
Yeah. So again, be interested, learn, listen, be curious. Let them talk 90% of the time. And then when you're done, go and implement the things that they say, and then follow up with what you implemented and talk about it. And that will continue and keep doing this. And this may take years, and it'll be crazy to see what that evolves into. But make sure you go and you implement it. That's key. Going and just listening. And they don't need another just random friend. I mean, they want a friend, but they want you to go implement it. You're not just going to be like, hey, let's go meet up again. I didn't do anything we talked about. Let's go chat. It's like they want to see you do it.
Yeah. They want to be associated with people who are doers because they're doers, and you got to show them you earn that seat. That's so good. Like that is, if we get nothing out of this podcast, that was gold. So you've now had a relationship with Gary for over a decade.
Yep.
And he's turned into one of, if not the biggest investors in Abernathy Holdings.
That's correct.
Yeah.
Yep.
And what do you think the biggest payoff has been for him in this relationship?
When you get to 83, I think at the end of the day, you want to find individuals that you can trust, that have the legs and the energy, and he gets to live that life while still being plugged in when he wants to be plugged in. But he knows that if he's not plugged in, because he's somewhere with the family, he knows that I'm out here doing the right thing. For example, when we first started the partnership, the deal was he had to look at every single site we built a storage facility on before we closed on it. So him and I used to go and look at all the sites. And a few years in, he stopped coming. And he just said, Andrew, I trust you. Now, again, there's a lot of weight that comes with that, nervousness. But that was an example of when he cultivated me to a point where I can help manage some of his capital. And that's what he wants. And he loves it. He lives through me. And even his family says it. Like, he gets so excited. Because he reminds himself of, of him when he was my age. Mm-hmm. And it's just kind of fun to live through me. It just gives him this youth energy that is just so much fun to watch.
No, because his wisdom will live on past his physical body. And there's nothing cooler than that. Exactly. Man, that's such a great takeaway. Let's move on, because this is a really interesting time that we're in right now, right? I've been listening to a lot of podcasts. I'm actually in the middle of attending the Strategic Investment Conference, which is, I think, the world's greatest economists and investment fund managers from around the world that come together under John Malden's platform. And almost every one of them has said, this is an interesting market. Like, it seems more confusing than the Great Recession. It seems as or more confusing than COVID. It's just a really volatile market with inflation and politics and wars and all the things. It feels really uncertain. So when you think about making that next investment, and maybe you should flush out, you said you're doing real estate site visits. So maybe just flush out what that primary business of yours is. But the question I want to get to is, how do you gauge risk? How do you think about risk, especially in the face of this kind of uncertain market that we're in?
For me, I like to, before I dive into the details, I always like to zoom out. I've done a lot of research on the Habsburgs. They were the first world power before the world knew there was another world around them. Then it was the Dutch, and it was the British, and it was the US, and they all the same cycles. Fiat, non-fiat. You've got, basically their curve, the 6 cycles of each of their successes and failures. And sadly, we're at the end. We're on stage 5 of 6. Not saying we can't start over at 1 as a world power. But then it goes to the question is, reserve currency is part of being the world power. And now you have crypto you're throwing in there. It's decentralized. So what does that look like? So anyways, there's a lot of things I like to look at when it comes to that as well. I feel inflation is going to be higher the next 50 years because what happens when you have this much debt as a country, which always happens with a developed country, is you can either default, have a balanced budget, which we're too far from now, with $2 trillion already the first few months of the year in deficits, is inflated away.
Yeah.
And so there's an elegant inflation period that takes time. You don't want hyperinflation. So that's first off, that's what I'm investing in. What benefits in stage 6 during a debt inflating away the debt? And so affordability is a big thing. The wealth gap sadly is going to separate, a lot of conflict. So I'm in mobile home parks, self-storage, which is extension of the home, and operating companies with returns or high returns on assets deployed. Because if inflation doubles, you have to double the assets to have the same real earnings. So if you're making 10% on your assets, or you're making 30% on your assets, that's a check. Those are checks you have to write in to double the assets to make the same real return. So that's what I'm in. So now we can just simply dive into one of the divisions, which would be self-storage, which would be us selecting sites. We actually didn't. So if you look back in history, 30% of the time, it's a good time to not do anything. It's a good time to be a seller, if anything. And 70% of the time, it's good to be building and buying, if you look back over history with commercial real estate. So when everybody else was building and buying in 21, 22, even 20, after COVID there, we didn't break ground on one storage facility. We were 60% cash. And then when the commercial real estate market corrected 20%, about 18 months to 2 years ago, that's when we went in really heavy. I mean, our pipeline went from 50 million to $250 million in like half a year. So it goes back to the Warren Buffett saying of, be fearful when others are greedy and greedy when others are fearful. And right now it is a crazy time, but that's also opportunity. But it is also a time to make sure that you have some liquidity. Warren Buffett's up to, I think, 39-40% now of market cap in cash. He owns 5% of the treasury bills in the US, which is insane. But I do think that there is opportunities out there. Humans are lagged, though. What I mean by that is some people out there are still wanting prices from 21 because humans, they have delayed reaction to events. And so I think that we're starting to ease into even more opportunities. So I hope this helps. I just think zooming way out is helpful, and then zooming in on what you can benefit with these tailwinds. You always want to have a stacked deck, and then zooming in and saying, okay, now is the time to build big businesses. Like my dad always said, farms are built on bad times, not good times. And right now I feel like I'm building the farm, so to speak. So
you brought up some great points there, and I'm glad you touched on inflation. I want to circle on that for just a second, but you hit on something that I often do when I'm looking at a new investment as well, which is there's so many spreadsheets, right? You're analyzing the numbers and the returns and all those kinds of things, but that process of zooming out, and as I recall how Warren Buffett describes it, is he looks at the headwinds that this investment's going to have versus the tailwinds, right? And I can imagine him sitting down with a piece of paper listing all of the headwinds that are going to slow that business from a zoomed out perspective, and all those tailwinds that are going to push the business forward. And besides for the analysis of the return, like, are there more tailwinds than there are headwinds? That's the exact same thing that I do when I'm looking at an investment. Like, for example, we bought a huge retail center in 2020 when interest rates were super low, and everybody was exodusing retail because we just saw what happened with COVID. Plus you've got the Amazon effect, right, of people going online. And when I sat down and did that analysis, I said, yeah, but look at all these tailwinds, the location, traffic, the demographics, the age of the people around here. And I came up with a list of more tailwinds than I did headwinds. We decided to pull the trigger on it. In hindsight, that was an extraordinary decision, but it was because of that exercise of zooming out and listing the tailwinds and headwinds.
Yes, exactly.
And you're doing the same thing and you're applying a different tailwind or headwind around inflation. And I just wanted to share a quick graph real quick. I'm going to just share my screen. I know you know this, but this is the buying power of the US dollar going back to 1913, which is when the Federal Reserve was enacted. So, we're talking 112 years. And if you had put $100 in a coffee can back then, today, and this only went to 2023, so this is, you have $3 worth of buying power today. So you've lost 97% of the buying power of that $100. Meaning if you had $3 back then, you would have $100 worth of buying power today, and vice versa. That $100 only gets you $3 worth of stuff today. So you have to be thinking about, as Andrew said, if inflation is is eroding the value of the dollar. Over time, that value is less. The way I think about that, Andrew, is, well, then if I'm borrowing debt and I'm going to pay it back over 30 years, I get to borrow and buy land or a business today with that debt at today's value, but I get to pay it back with 2030, 2040, and 2050 dollars, which I believe will be less valuable. So have you thought about that as it relates to how the relationship with how inflation kind of devalues debt and dollars over long periods of time?
Yeah, for sure. And I also look at it too, again, zooming out, I think the 10 year is going to be in a 4 to 6% range. I think short-term interest rates, of course, will come down. That's, Federal Reserve driven. And the reason is because somebody that's buying a 10-year bond or loaning money basically to somebody else, they know that they're going to get paid back in a devalued dollar, which means they're going to need a little higher interest rate to counteract. So that's why I think the 10 years are going to stay in the 4 to 6% range. The currency, the reason currency is to eliminate the time it takes to barter. That's what currency was invented for. It's to hold value between transactions. And these individuals basically know that dollar is devaluing. I would never want to be the owner of debt. I like to be the borrower of it at the right interest rates. You always refinance, marry the product, date the rate, finance lower. So 100%. And I do think the other thing too is it's other countries. So like our 10-year actually stayed low. The 10-year was lagged on when it went up. And the reason is because Japan kept their interest rates low because they've been trying to get inflation for 20 plus years. So you had Japanese buyers in our bonds. You had a lot of buyers which kept that interest rate low. The second they raised their interest rates, those buyers left and our interest rate went up because the buyers went down. And so that's something I'm really interested in. One, yes, I love real estate for a lot of reasons. One, it's an inflation hedge. I like to have monthly adjustable properties. For example, we owned a building for our equipment dealership, sold it to a group in California, and we'd signed a 25-year lease at a 2% escalation, not CPI driven. And so my rent's probably going to get cheaper 2% per year.
For sure.
Yeah.
That was a great deal you just negotiated.
Exactly. So all those things to be said, I want to be on the winning side of inflation. That's month-to-month rental adjustments. That's operating companies with high return on assets deployed. Affordability. Sadly, people that don't own assets, which is a majority of America, their costs are going to go up. They're not going to have any assets to offset it. And that, sadly, there's going to be a huge wealth gap, which I'm not proud of that. I'm just saying it's something that's sadly going to happen. It happens every time in this cycle.
Yeah, you don't have to like the rules, but you need to know the rules of the game and position yourself. And I think about it all the time. Like, who's the biggest debtor in the entire world? The US government, $37 trillion in debt. And inflation destroys debt. That's a concept I learned from Jason Hartman. And so if that's the game the US government's paying, I hate that game, by the way. But I as an investor, I have to play the game the same way and borrow of fixed interest rates over long periods of time, pay back today's debt with tomorrow's deflated dollar.
Correct.
Okay, dude. So this has been super fun. Let's move on. I want to talk just a little bit more about the holdings that Abernathy Holdings has currently. So you guys have self-storage. I think you have some industrial. You have some leasing companies. Just walk us through what your kind of core investment thesis is around those.
Yeah, so I have three divisions. And each division has verticals, and so our Abernathy development, which is self-storage, we have our own construction company, bulk ordering garage doors, materials. We own the self-storage property. That's one division. We have our equipment dealership division, and that's got your industrial equipment, your leasing, your sales for municipalities, rock crushing equipment. That's there. And then you have Ozark Communities. That's our manufactured homes. So we have over 1,000 lots. We have a mobile home dealership license. Eventually, I'd like to actually manufacture our own homes from ground up. But that's the third arm. And we'll continue to grow, but that's the current three. So storage, thesis there is basically people are living in smaller spaces. We build in major metros, higher income areas, very dense. The affordability is becoming a problem. So people are being forced to either rent or live in a small home. And storage went from you visit it once a year to you visit it once a week. So you can tell that is now an extension of somebody's home. The other thing that's been really interesting is Amazon drop shippers. That's what they use. The average person can grow their Amazon shop bigger than a spare bedroom, but they never get big enough to have a warehouse. So they all land in our storage facilities. You walk up and down our hallways. They're in their unit packing boxes and getting ready to ship them out.
Interesting.
So storage to me is basically a new virtual mall. It's an extension of your home. There's 1,000 tenants per build we do. They're all $20 million buildings, 3-story, looks like a hotel, best sites, best pieces of dirt, and they're residual. Once these things fill, 94% average occupancy in the US, once they fill, people still pay today a 5.5 cap rate, because you don't have to earn that business every night like a hotel or something like that. And this is just, they set it and they forget it, and it's just automatically out of their checking account. So I love storage, and it's simple. 1 bathroom for $30 million building. We build them for 20. They're worth about 30 once they stabilize. And we're down to the point where we're building them at 65% of stabilized value because of all of our vertical profits for our investors.
It's fantastic. And all those businesses are very inflation. They're going to do well with inflation because you've got annual or 6-month or 3-month leases, whatever those are in storage units, meaning you can continually ratchet up the rents as inflation drives other costs up. So you've got an inflation-proof businesses.
Yep. Yeah. And then the equipment dealership side, I'll just touch a bit on all three. Equipment dealership side, we did 31% return on equity last year, 23% return on total assets. And what I like about that is the average business in the US does about 12% return on total tangible assets. And so I'll just make you a quick example using Normont numbers to the average. So if a business has $10 million in assets, and they're making, easy math, 20%, they're making $2 million on that 10 million deployed in that business. When the average business in America on the same 10 million is only going to make 1.2. Right? If inflation doubles, the owner literally has to rip a check for $10 million to double the assets, to double the earnings, to have the same real return. So would you rather double the assets of a $20 million business or a $10 million business to get the same exact earnings? And that's why I'm really focused on finding operating companies that have high returns on assets deployed, because I know I'm going to have to invest and double their assets when inflation doubles from here. And you want as little of headwind as possible on that side. And then also the infrastructure in America is lagging. They haven't invested much into it. So municipal equipment and infrastructure, it's going to be a huge tailwind. So love that industry. We bought that company 10 years ago, and it's already done a 500% growth. And they have plenty more to go. And then the Ozark communities, mobile homes, they are not building any more mobile home parks. In fact, the demand is going up, the supply is going down. And what you're finding is these big guys, if it's $100 million, $50 million portfolio, they'll pay a 6 cap. And these little ones for $800,000 to $1 million, $2 million, you can buy them at a 9 cap. And they'll even seller finance. So what Ozarks does is these 1,000+ lots we have, these were all small little transactions. Every year we're rolling in mom and pop parks, one by one. So you make the arbitrage on the cap rate. Our efficiencies go really high due to it being a 1-to-1 roof. And there's a huge demand for it and growing.
So the listener right now is thinking, how the hell does this 30-year-old guy manage all this stuff? So let's get into one of your superpowers, which is how do you manage these 3 different businesses with the vertical integration, with owning your own construction companies? Like, I only have 24 hours in the day. It appears like you might have 50 hours in the day, Andrew. But how do you get so much done? How do you manage so many businesses at the same time? What's that superpower for you?
Perfection is the enemy of progress. And these are things, Abernathy Holdings is structured like a Berkshire Hathaway in this way. So Warren Buffett, they've got 15 employees at headquarters in Omaha, and they have over $1 trillion market cap now, or about $1 trillion, 980 million, I guess, $1 billion. And what they do is he's got an individual for each division, and he incentivizes them where he doesn't have to watch them. What I mean by this is Luke Stewart at our equipment dealership. I set all the incentives for our presidents. His incentives are very simple. Here's a base pay. Anything over a 20% return on assets deployed, I'll give you 10%. So if he makes $2 million or $2.5 million on 10 million in assets, his bonus, he's going to get 50K, right? 10% of 500,000 because the 2 million is a base. If he keeps the 2.5 million, now he's got 12.5. He's now got a higher hard hurdle next year. So these managers, these presidents, I don't have to check in and see if they're going to send me money. They're going to send me money if they can't put it to work efficiently. I mean, every dollar he keeps, he's got to make 20% on to even start getting a bonus. So you show me your incentives, I can show you your organization. I can tell you all about it because every president's incentivized differently, where I don't have to babysit them. So I talk with our presidents a couple times a week. One of my superpowers is finding passion and good moral people. Each of these leaders has been in these industries for 15 to 20 years. I find a person, I find an industry I like and a person I like, and I build a business around them. I don't build businesses around Andrew Abernathey. I build businesses around other people, and they run them. So at the end of the day, the equipment dealership, I'll talk to him two, 3 times a week. We'll go over the numbers once a month. That's one division. I probably spend half my time just managing our 114 investors, which, someday that might shrink as well. So it's really all about delegating, finding great people, incentivizing them accurately, and letting them do their job. They don't want to be puppets. So that's how I look at it. Like, to everybody else, it's a lot. I have 6 people that report to me. That's it. Out of all the employees. Most employees don't even know me.
That was a great summary. I think one of the mistakes that I see entrepreneurs make is they either want to keep too much of the incentives, like, all the upside they want to capture, and there's not enough incentives for the person to run it and have the autonomy and like really want to work hard. Like the upside's just not there, or the incentive is just misaligned. So what wisdom would you have to share around being generous with what you bonus somebody or give them in terms of incentives? And how do you think about aligning incentives with what you want them to accomplish?
Yeah. Well, I think everybody that works for you, especially the leaders, need to act like owners. And not all owners need to put the money in and take the risk. You say, well, my name's on the bank loans, I put the money in. It's like, yeah, that's great. But everybody around you needs to act like an owner. The only way to build a multi-billion-dollar company, if that's your goal, is to have a lot of owners around you that are acting like owners. Now, if you want to build a $10 million business, you can probably do that with just you and a bunch of employees. Employee and owner are 2 different things, and an owner doesn't need to be on the capital stack. So I always incentivize people based on the goal. My goal is to have high returns on assets deployed, and or a high RRR without crazy amount of leverage in the real estate side. So you can incentivize them based on that. For example, every storage facility we build, we give away 2 to 3% of them to the people that build them, the people that run the company. Now, it's a loan. They got to pay that back with an 8% hard hurdle. So we're getting 8% on their money. But if they're making a 20% IRR, they get that whole spread. They're not PGing any bank loans. If it fails, they're not losing their house. But that's their incentive. They're aligned with us without having the risk that I get to have. I get their other 97%. And so instead of having 100% of something, why not have 97 or 95 or 90% of something that's way bigger than you're ever going to be alone? You've got to share. I'm not going to know as much about equipment as Luke. I'm not going to know as much about storage as Nate, or mobile homes is Nick and Dan. I don't need to. I just need to find people that I want to partner with, that I can put my money and trust behind, and watch them build something beautiful and amazing for me and the other investors, and make sure they become millionaires in the meantime, as they should.
As they should. Great. That was super solid wisdom. Thanks for that. All right. We talked a lot about your successes. I sometimes find it more interesting to talk about people's failures, because they're always good to laugh at. Our failures are so fun. In the rearview mirror, not at the time. So let's talk about a few of the failures you've had in business so far, and maybe the lessons you learned from them, and how you got through them mentally. Because one of the things that I learned early from Rich Dad Poor, Think and Grow Rich by Napoleon Hill, was that most entrepreneurs stop 6 inches from goal, right? There's that story of being 6 inches from the gold and shutting down the mine and selling it. And the first day, the next miner hits the gold. So how do you think about obstacles? And let's talk about a few of your failings.
I love it. This is a fun topic. So when I started Holdings, there was no rhyme or reason or focus. We had commercial properties, HUD buildings, equipment dealerships, bought into a helicopter company, insurance company. And in 2000, and things were going good. You know, you got to get kicked in the balls, excuse my language, to change your path. In 2017, Holdings was probably worth about 20 million, and I was having breakfast with Gary Tharaldson, my mentor we've talked about, and he said, Andrew, you know, you're good at a lot of things, you're not great at anything. And man, did that hit, and it made sense. And I left that breakfast not sad, like it was like almost like a level up call out, right? And it was I really took it well, even though it hurt to hear, and it made sense. So I looked at it. To explain it, I had a lot of cups, a lot of companies, divisions, and not enough water, not enough money. What I mean by that is I couldn't fill any of the cups. So there was no efficiencies, right? Like, for example, if we don't build 6 or so storage facilities a year, we can't afford to have our own GC. We can't afford to have our own bulk ordering. So there's peak efficiencies in each division, which I also recommend when you start a business, figure out peak efficiency and get there. But that's a different conversation. So I left that thinking, okay, man, it's funny how entrepreneurs, you know, that I hear so many people say, I'm waiting for the idea, or they have all the ideas they've done. It's like, there's no the idea. You grab something, you make it the idea, you put your blinders on, just focus on that. You could have grabbed 1,000 things and become a billionaire. There's not just one thing to become a billionaire. You could anything. What you do is great as well. I could have focused on that and probably done the same thing. It's just, you got to find something. So I left that meeting, and I went and the reason he said it was the helicopter company we invested in went bankrupt. We lost 15% of the company's value on one deal. And that's what triggered that comment from him. That's what triggered my, gosh, this isn't right? I don't know enough about everything I'm doing. And so that's when I went back to the drawing board and I said, okay, here's self-storage. Let's start with that. We sold everything off, dove all into that. And then once we felt like we had that under control, then we added another division. So it's okay. You know, Warren Buffett's got 100 cups now, or 80 cups. But you have to accumulate those over a long period of time. Make sure you can fill a cup before you add a cup. A lot of entrepreneurs try to add cups and they don't have enough water. Things take time. And so that was a huge mistake I made on the helicopter side. It was a huge pivot I made on the advice side and not taking it to heart. And when I lost 15% of the portfolio, of course, things go through your head. I'm human, right? Like, maybe it was all luck. You know, maybe I'm not meant for this. You know, I failed. Maybe I should give up. My counselor's not gonna like this, but I give myself 2 days of self-pity usually, and then I have to like stand up and, you know, do something. That's my rule of thumb. I have 2 days to feel bad about myself, and then I got to move on. Not saying that's probably the most healthy thing to do, but it's worked well.
Got to keep forward momentum.
Yeah.
I really like what you said there. And, you know, if you listen to the wisdom of Steve Jobs, right? He said, I'm most proud of the 1,000 things that we said no to,
Yeah.
rather, because that enabled me to say yes to the 1 or 2 things. And I like that idea of, you can have 80 cups, but not at a time. You got to have 1 at a time, and you got to hit maximum efficiency and find your leader and align the incentives, and then you can move on to the next cup.
Correct. And the nice thing now is it's a formula. So all of our presidents are incentivized to send me money back that they can't invest into their division efficiently. So when my cash pile just gets really big, that's my sign of, okay, I need a new division. Like, it's that the checking account tells me when it's time.
Yeah. Interesting. Let's spend the last 5 minutes. I'm going to give you a closing thought at the end, but I'd love you just to talk a little bit about Abernathy Holdings as it relates to, are you still accepting new investors? How can people find out about you if they want to connect with you and they want to potentially become investor?
Yeah, no, great question. So it's all accredited qualified investors. We haven't raised money in a few years, but there's always individuals buying and selling shares. You know, Abernathy Holdings is basically a private Berkshire Hathaway. That's my goal. I want to continue to acquire and build Abernathy Holdings. And we've never done a dividend. Our share price was $8 in 2012, and now it's 80 today. So it's a value creation play. People can buy and sell shares as they wish. It's a very vetted program. So I have individuals that reach out or they get referred. I meet with them. They come in. We have a very great group of 114 people. But so that's kind of the process, is reaching out, coming in, meeting each other, making sure you're qualified, accredited, and then making sure that what we're doing and what we want to do, make sure it aligns with your goals. And then when you say, yep, I want some, then I put you on a list. And then when somebody's looking to sell, then I connect the two parties, and it goes from there.
Great. And where can people find out information? Is it abernathyholdings.com?
Yeah, abernathyholdingsco.com or andrewabernathy.com. Either one of those would work.
Great. Very good. And let's leave you with the closing thought. Like what words of wisdom would you want to leave people as we wrap up this awesome podcast?
At 31, and I know we've touched on it, I just really wish two things. One, I wish I would learn to focus earlier. I can't even imagine where I'd be if I didn't wait till 2017 at my ripe old age of 27.
And when you say focus, just so I understand, you mean not have 6 different businesses going, but build the first one before you build it. Okay. So I want to make sure I'm tracking with you there.
Yeah. I wish I would learn that. And then I really wish, on the personal side, I wish I would have learned balance. I live by the 5 F's, faith, family, fitness, friends, and finance. And finance has always been easy to me. I was always around I have 3 little boys, as mentioned, but being present and really being present are 2 different things. I did not focus on my fitness at all till 28. My faith fell behind a bit. And so I'm just wanting to say is really check in on all of your F's, or whatever your system is. You don't need to have mine, but just really make sure you're not a one-legged stool, because you will fall over. And realizing that earlier on in life is going to be really beneficial for you. And hang out with who you want to be with. In your group, if you have one person that's the least healthy, you will levitate towards them. So you will be the mean, not the average. So just make sure everybody you hang out with is who you want to be, and because you're going to be like them. And I just really advise that. 20s are a confusing time. And so just do your best to keep your moral compass on track.
Super good. I took away from that, be diversified personally, meaning not just maniacal towards business and leave everything else alone, right? Diversified that way, but be super narrow professionally. Master one thing before you move on to the other.
I love it. That's really well said. Perfect.
I learn every time I hang out with you, man. We need to hang out more.
I love that.
It was an absolute pleasure. We'd love to have you back. And you shared an incredible amount of wisdom today. So thank you so much for your time. And it's great hanging out with you.
Thank you so much. Looking forward to next time.